Hello, I'm your host, Effie Pilarnu, and today I'm delighted to have Simon Taylor, who is the founder, creator of Fintech Brain Food. He's very well known. Maybe I could say that he's one of the youngest fintech veterans that I know, in the last decade. Although I don't know your age, Simon, and let me welcome you on that note.
Well, thank you. Everybody loves a compliment to kind of get started. I will probably do my best not to reveal it and let the grey hairs do the speaking for themselves. But it's very, very kind of you. It's a pleasure to be here.
Pleasure to have you too. And since you are the creator of Fintech Brain Food, you are at Sardine. So I think it's all about Fintech food, and let's have some fun. The three F's.
Let's go.
Let's
Let's do
go.
this.
So let's start with your amazing report. Nobody else has produced an 11 pages report, the state of fintech. And tell us, for the audience that doesn't know, the 10 themes that you have chosen. And I'm sure it was a difficult choice, how to sort of categorize and organize the state of fintech, and also why you're calling 2024 the age of fintech hyperscalers. Is it only just because of, so many customers, the 100 million from Nubank and the 50 from Revolut?
That's a piece of it, but there's a lot more to it than that. So let me just run through the 10 trends, which of course, number one was the trends themselves. So there's actually 9, but the 9 trends were obviously where fintech meets AI and financial services and AI. It's been kind of a big deal, but I think that niche hasn't been covered and it's an important one. The second trend was embedded finance. Third trend is banks are back, which is exciting and interesting, mostly driven by interest rates, but we'll get more into that. The fourth trend, was neobanks. This is the rise of the new banks, the Revoluts of the world, and what's happening there. And then, of course, 5 was payments. This is not a vacuum. Payments continue to change. Number 6 was our friends in open finance. It's sort of the story of when will it transform the world, and I think it's really starting to look like it's dangerously close. Number 7 was where big tech meets wallets and the wallet wars, and that's really starting to heat up, and we can talk more about that. Number 8 was stablecoins. Don't know if you noticed, they're kind of a hot topic at the moment, possibly second only to AI in all of venture. And what are they? Why is it taking off? Why are people paying attention? And then last but not least, something I called the scamdemic, the rise of scams as an organized crime that is unprecedented in its volume and its scale. So a lot of trends to get through. We can start more or less wherever, but I will answer your question. Why did I call it the age of the fintech hyperscaler? And I think, yes, there are lots of customers, but there's lots of revenue as well. And once you get past the 50, 100 million customers and you can start cross-selling to them, you can get into the multi-billions of revenue. You start to see this compounding effect take place that we only really saw with the big tech companies historically. And now we've got sort of our own big tech companies like Stripe, who are processing $1 trillion on an annualized basis. And this puts them up there with any legacy incumbent, but they're continuing to grow at a very rapid rate. And a hyperscaler is something that is already big, but continues to grow. And that is something we've seen in the cloud service space. Maybe we see it now in the infrastructure and the consumer space of financial services as well.
Yeah, that's the best example in payments when there's, when I look at leaderboards that show, from companies like IDC, where they look at, where JP Morgan and all the other, even the earlier disruptors like PayPal, where they are and how many hyperscaler fintechs are on the top right of the quadrants that they have, Stripe, Biden, and, companies like that have really skyrocketed and are, not known to retail and consumers so much, right?
Well, these companies are, yeah, sort of not as well known at the front end, but maybe a neobank is, maybe some of the other companies like a Revolut is. What's fascinating is if you look at Revolut, maybe, they're in something like 40 plus markets. They have banking licenses in Mexico, the UK, and in Europe, and now potentially the United Arab Emirates as well. This is sort of almost starting to look like Citibank's strategy from the 80s of becoming truly global. But what's different is they're doing it with a single global tech platform, which was not the case when we had the universal global banks of the 80s and 90s. So this is meaningfully different. Stripe is in something like 40, 50 markets, but it's a single global platform. The Agit, it's a single global platform. Whether I'm doing e-commerce or online or a terminal or I'm using a mobile payment, it's a single platform, a single set of APIs. And what that means is they can compound their advantage and they can deliver different types of value and different types of revenue to their customers. So instead of competing on price, they compete on value and they can do more things with that technology stack. And this has always been the story that's missing. Everybody looks at Revolut or Nubank and says, well, we could have a mobile app. And they miss the qualitative assessment that says, okay, but what's the average revenue per user? And what's the cost of acquisition per user? And what's their lifetime value? And you realize that the cost of kind of running an account for Nubank is like 90 cents on a monthly basis, just a fraction of what you would see at a large institution. So their hurdle rate for profitability is so much lower. So this is why I call them hyperscalers, because the more they scale, the more they get the returns to scale of their single digital global platform.
Yeah, which exactly is not well understood. And I do see actually maybe their marketing department, and I'm talking about Revolut because Nubank, is not global. So I wouldn't know, but they a lot of their marketing and their messaging is around competing on price. And I guess that's more appealing to consumers because they don't understand their potential, or it's the way it's been done traditionally.
Potentially, yeah. I also think the price you see on the sticker is what gets you to come through the door, but the experience you have afterwards is what gets you to stay there and potentially puts you top of wallet for the cross sell. We used to talk about for credit cards, which one's at the top of the wallet. And now it's an interesting question of which neobank is the one you're using as your daily driver, because that might not be where your salary is going, but it's probably where you're living and managing your money from, and who's going to be first in line when they launch stock trading or, heaven forbid, crypto trading, or if they launch some new sort of business account. Are you going to open it with them where you have a great experience, or with the big bank where you've had a terrible experience? So that qualitative experience leads to, over time, reducing your cost of acquisition, because the word of mouth, viral activity flywheel starts to kick in.
So from all these areas, we need to focus on one. So I've picked the wallet wars because it's very timely, right? We have X launching in this quarter in the US. It's X money. I guess last year I realized what a big year it was around wallets. First, because Apple was forced to open up its NFC capabilities in the UK, and then it voluntarily opened up, I guess, in other areas, in other jurisdictions. And then we have UPI that opened up interoperability with wallets like Paytm. But Europe, and we haven't seen a lot, but still Europe is working on a wallet for a digital ID, and on the Vero wallet with the bank consortiums. And then we have in Asia all this amazing effort from Alipay Plus to create interoperability of wallets. So there's so much going on with wallets. It's really dazzling. You could become a specialist instead of saying I'm a specialist in consumer banking, I'm a specialist in wallets and what is going on there, right?
I think the fundamental thing to understand about wallets is the center of gravity for a consumer's financial life is moving away from a thing where I do finance to a thing that stores my identity, potentially stores my loyalty cards, my airline tickets. It's where I book my travel, potentially. And yes, I pay through it as well. And, you know, Apple is the most well known in a Western context. But as you rightly point out, around the world, there are many, many others, and they use different payment mechanisms and different authentication mechanisms. But the experience generally ends up being this rebundling of financial services. There's a classic image of the old Wells Fargo homepage and all of the startups that were just attacking the individual products. And we successfully unbundled financial services. There's a fintech app for just about everything. Problem is, I don't know about you, but I've got a Coinbase and I've a Kraken account and I've got a Revolut and a Monzo and and on and on and on. It'd be really nice to rebundle all of those. And yes, open finance potentially helps you with some of it, but really that's the plumbing. It's not the consumer experience conversation. And where the wallets have gone, if you look to Asia, they've been doing it for a long time, but they've become increasingly more and more like marketplaces and less like just the sole operators of those financial products. Although you do see that as well. So, can you start to rebundle finance where the underlying provider, the manufacturer of that financial product, might not be you, the wallet provider? Apple works with Klarna and they work with Affirm. And you see this now with many other wallet providers, even the Revoluts of the world. A lot of their stock trading capability is not something they've built in-house. It's come from a third party that they've rebundled. And so historically, the banks themselves would manufacture a lot of that product. They might rely on some third-party vendor to provide the software, but they would be the underlying balance sheet. They would do a lot of the work. Whereas now with APIs, you can rebundle a lot of financial experiences inside of the wallet, but you can also do it next to somebody's digital identity. You can also do it next to their travel documents. And the crossover between those things becomes a real fight for it's less who's top of wallet, and it's more who is the wallet that gets to control.
I mean, I like to think of it, Simon, as going towards becoming a lifestyle dashboard or operating dashboard. And of course, we need a balance there because this notion of being locked in one super app or closed system is not very pleasurable or desirable in the developed world. And in a way, I mean, there's some studies now that are looking at the super apps and saying, wait a minute, is this another digital feudalism form because of these closed loop, if you want, business models that have developed and of course have had major impact in terms of financial inclusion, but you can look at it on the other side of the coin and wonder whether we want that.
It's a difficult question. Fundamentally, the lesson from the internet era was, the desktop era was that open beats closed. The lesson from the mobile era was that closed beats open and somebody gets to take a toll. I don't know that there's a right answer in any of those. There's just a right experience for your customers in your market.
Yeah.
And what is the right experience is something that a lot of organizations aren't talking about. A lot of large organizations are just trying to copy paste what they saw somebody else do. And that is not thinking 2, 3, 4 years down the line of, well, actually, how has my consumer's financial life really evolved? Therefore, how do I address the problems they have that my products that I have on the shelf don't necessarily address? We have become an industry that pushes product. It's like, well, I've got a savings account and I've got a credit card, and would you like one? And here's the price. And when you're selling products in that sense, you tend to compete on price because it's like, well, what else am I going to compete on? Well, you compete on experience by rebundling it, by creating these magnificent experiences at the risk of feudalism. And I think the US banks have cottoned onto this in a way that perhaps the Europeans maybe less so, in that you see the US banks at least trying through pays to build their own sort of consortium wallet where the banks have a little bit of leverage back over the Apples, the Googles, and others in the world, the OEM makers. And even the Klarnas and the Affirms who are coming at it more from the shopping side. There are some very interesting questions about who gets to be that wallet for you. And I don't think the European banks have really made much of a move. They're just selling the same old products they always.
I can't disagree on that. In this wallet, you call it war, and they can also say that it is a huge transformation that is going on. And it's definitely benefited all business activity on the internet because, in the previous 2 or 3 decades, while the internet was developing and being adopted, a lot of businesses came on that were not native, and now they're helped by all these developments. I want to share with you a quote that David Birch has in his book, and he attributes it to Dr. Seals, who says that wallets are the biggest instrument of personal agency since the browser. So, when I hear this, and I'll repeat it so it sinks, because it's quite important, I think, to reflect on. The biggest instrument of personal agency since the browser is the wallet, okay? So when I hear this, I say, the truth is that wallets have benefited mostly the providers of the wallets and the merchant, not really you and me, the end customer, because the intelligence of the wallets are really prioritizing, when I think of Shopify or Klarna, all those types of wallets, they're not really providing intelligence to me and you. Because if they were, I would have a wallet that says, Effie, why do you have your money at XYZ Bank? Move it over there. It's, better for that. Or why, 24/7 watching on my side. Yes, the customer experience is better. You see what I'm saying? So it's, in a way, I don't think that wallets today are smart.
No, they're not.
I don't think that wallets are anywhere close to this personal agency, that there's potential for that. So can we flip the intelligence flow, which is going to the merchants, really, that are trying to sell us stuff, products, services, right? The whole story of the internet, improving that experience, but not really for us.
Yeah, it's an unfair fight, isn't it? I mean, merchants are spending massive amounts on marketing and R&D to get you to buy more stuff. The wallets win when they help merchants sell more stuff. And there's very little upside to them for helping you do smart things. Yeah. What I think so interesting about the opening of NFC, and if it continues to go that way more broadly, is the competition space for new people to create new wallets really opens up. And Visa Flexible Credential and other things mean that my card with one issuer could potentially work somewhere else, and I could switch who's providing the line of credit. So suddenly I've got this portability that I didn't have before with those 2 bits of new technology. That portability is really interesting if you are somebody like a PayPal and you want to control some more of somebody's financial life. If you are somebody like a Venmo, if you are potentially a neobank like a Revolut, now you can do things that are more consumer friendly because your cost hurdle rate, your profitability hurdle rate is much, much lower. The traditional model of I'm the supermarket and you buy things from my shelf is, well, yes, okay, but do you have to manufacture all those things yourself, or can they come from somewhere else? And can you also be a personal shopper, helping people pick the right things for them? And to your point, the intelligence has been very, very weak, but this is where AI is showing real promise. It's showing promise when it's productized and packaged really well. At the moment, it is almost entirely unreliable for most of the people most of the time. You have to be extremely skilled or as a consumer, or you need somebody to really package the AI in such a tight and constrained way that the capabilities of what it does becomes a lot smaller. But still, there is a potential world in which the intelligence does live on your device. It is sovereign to you, and you are paying for the intelligence, much like you would pay for a private banker, but at a much lower cost. And when that happens, not only has the authentication and the credentials center of gravity shifted, which is kind of what we've got now. We've got this ability to reaggregate accounts and put it in the hands of customers to authenticate on the mobile device, but it's the business model hasn't changed. If more people can create wallets and more AI can sit on the device, which is looking like it's happening, especially after DeepSeek, these smaller models could start to automate some of that agency and automate some of the switching. Will it happen? Don't know. But the capacity is there. Can somebody fix the business model and change what I'm paying for from being the commodity financial product to the thing that helps me get the maximum value? I'm paying for $200 a month for a private banker in my pocket, but that makes me another 1,000 over the course of a month by doing lots of interesting things and saving me money. I don't know what the quantums would be, but you can imagine something like that having a really good ROI calculation for a consumer.
By the way, in Davos, on one of the sessions that I attended organized by Axios at the Qualcomm venue, there was a demonstration by Qualcomm of on-device intelligence. So basically, offline, no internet, and you have the same experience that we have with Perplexity AI and all those models completely offline. And of course, they were talking about how this is going to change soon, in manufacturing, in robotics, and in those embedded in drones and so on. So that part of the puzzle is much closer than with the on-device intelligence. The rest, because obviously financial services are complicated with all the fiduciary duties and all the regulations and compliance, but we are in that direction. What would you say, without thinking how plausible it is, what would a smart wallet look like, in your opinion?
It's a great question because I'm don't know what the UI pattern for AI is generally yet. I don't think it's a chatbot. Something about the chatbot feels like an expert mode product. I don't know how often you use a command line interface, Mac terminal or kind of MS-DOS style terminal windows. But for me, it's maybe a few times a week when I'm tinkering with something. But for most people, how often is it, and how many people can even use it? Sadly, I think getting the most out of most Gen AI products still requires a real concerted effort by the user. Like, these products are surprisingly hard to use to do anything other than basic parlor tricks. So there's a real question about what the right UI pattern is. Is it conversational? Does it start to feel like an agent in that we name it and we talk to it, and it kind of does displace labor, and we do have the private banker, and you start to have a conversation with them? Therefore, who provides that service? Is that purely software, and is it something that you buy and pay for, but it lives with you, and there are no guarantees, and you have that agency? Or is it coming like a service, like an accountant, where it's some third party who's acting on your behalf because you're paying them? That second one feels more logically consistent, in that I would have these conversations, and then it would need to interact with my wallet to carry out my instructions, just like a private banker would. So I suspect it's conversational, and I suspect the wallet is how I drive my finances. But it would then need to figure out how it delegates authority to the AI to drive my finances on my behalf when I've given it approval. The exact user experience is TBD. OpenAI is experimenting an awful lot with voice and voice communication. The problem with voice is it doesn't work very well on a crowded train going, please add another £10,000 to my pension because some windfall just happened, some relative just died or whatever. It's not a great conversation to be having in public. So the UI pattern is the really big unknown. I think we're sort of in the pre-graphical user interface phase of AI, and that makes it really hard to know what to do if you're a financial institution, if you're a wallet maker. But it also makes it super exciting if you're an entrepreneur, because it's never been cheaper and faster and easier to build demos of products and try and do something. I don't know if you've played with Repli or with Cursor or V0, but the speed at which you could spin up something that looks and feels like an app and a product that sort of works is incredibly quickly. So I would encourage experimentation on that. That was a very long way of saying I don't know.
No, none of us know, but we are sharing thoughts. And I think it's important because, in looking backwards now and given all the developments, the tech developments, it feels like the disruption that has happened in the last 10 years is fairly limited and fairly confined at the distribution level, not at the manufacturing level, with the exception of what has happened in the blockchain space, where we have seen different manufacturing, DeFi and automated money makers and liquidity pools and all that. That is different manufacturing, in my opinion. Do you agree? And do you feel that we are closer to getting like a leap in terms of disruption?
Timing DeFi is incredibly difficult, and timing when that leap comes. But yes, I mean, the next thing I need to write is when the wallet wars meet new manufacturing, aka where are the crypto wallets? Yeah. And because really what I do then have potentially is self-custodial wallets, the ability to custody my own assets. And then what I do have already in production in crypto are AI agents that I can delegate parts of my wallet to trade on my behalf.
Yep.
And they are completely autonomous. And from the soup of crypto often crawls things that look disgusting, like meme coins and whatever else. But from the soup of crypto also crawls things that become very acceptable when you wind the clock forward a decade or so. It's now not controversial that major asset managers, pension funds are buying Bitcoin as a part of the overall portfolio. It's a regulated financial product under the CFTC, and the SEC have issued spot licenses for ETFs. And this is kind of wildly accepted. If you would say that in 2013, 14, 15, I mean, you were a heretic. And I think we're sort of there with the idea of AI agents in crypto taking over your financial life. It's absolutely crazy. And there's also the ugliness of meme coins, the ugliness of some of the things that happen on X, but it's also where the genuine innovation is. There are AI agents on X that are completely autonomous, that have their own wallets and their own ability to move those funds on networks entirely as software. That is extremely difficult to replicate on any other underlying substrate. Could you build APIs to make some of those things possible? Yes. But the fact that they can custody those assets, move them, operate within that, like brain above the ability to move the transactions, that's fascinating. So it's one of those things where it feels like the machine economy is inevitable. The hardest thing to figure out is the timing. There is this new source of manufacturing. There is this new source of intelligence. It inevitably goes on and becomes the entire economy. But is that in 100 years, 1,000 years, 10 years, 10 minutes? I just can't tell.
Yeah, yeah. I think that you need to put in a footnote in every piece in every newsletter that you publish, when you refer to wallets, make a disclaimer and say these are not the true wallets. The true wallets are the self-custodial ones, really, because they have this potential. It's the same like the confusion with the term tokenization. We're talking about tokenization on blockchain and tokenization, in cards that has existed forever. The same, most people think of wallets and they think of an Apple wallet and maybe a Walmart wallet or something like that. And
yeah, are you tokenizing the authentication mechanism, the card, or are you tokenizing the underlying asset itself? And is it existing on a network that can be directly instructed from the piece of software in your phone? Because if the software can make the direct instruction to move the asset on the underlying ledger, then there is zero intermediary between you and that happening. That is not the case with a financial institution's wallet or any other wallet. What that wallet is doing is sending an instruction to an intermediary to do something with your authentication. The card is essentially saying, I, Simon, authenticate this movement, and I would like to do it on your systems over there that you control and that I'm not really in control of. Because the flip side of that, though, is there's a reason that banks evolved in the first place. I don't know if you saw the very sad case of the founder of the Ledger wallet, who was attacked and beaten recently. And the problem with a self-custodial wallet is the same problem you have walking around with €1 million or dollars in a briefcase. If it's very obvious that there's money in there, then you are a target and you're going to get attacked. So. Yeah. I think this like self-custodial versus self-directed is actually quite a nuanced topic of, am I in control of the assets, but am I entirely in control of those assets? Do they effectively is the only thing that can move them, this wallet, or do I want some intermediaries in there? And what does that do to the business?
The question is whether we want that personal agency fully, to what extent we want it or not. And we know that not all people want that. Simon, we need to wrap up because we know we could talk for hours. What would you add or change in your report, which obviously you wrote, I don't know, beginning of December, right now with all that has happened, that is happening, the upheaval with everything, with X, with Trump, with China, with LLMs? Is there something that you would have changed?
I don't know if I'd have changed the overall themes, but I might have changed some of the focus and where to this exact conversation we were just having. I think the AI and crypto story hadn't really taken off. And I think it's an important one because it is one of those that strikes me as being really important over the long term. And maybe it's not a 2025 trend, maybe it's not even a 2029 trend, but it's one where once you see it, you can't unsee it. And it felt like if I'd have included that, I mean, it really sort of took off with AI 16Z and everything that happened around that in the December timeframe. So I'd already written the report by this point. I think I would have given that more focus, because if we are to truly have self-custodial wallets, and if we are to have more agency and we are to have AI in our pockets, that's the closest thing I've ever seen to it. So we talked a lot about it, and I think you might see that in the 2026 edition.
Yes, and maybe it will not start from retail. Maybe we'll see clearer signs at corporate treasurers or entities like that that they're starting to see what we used to say, I can be my own bank. You and I don't want to be my own bank, so to speak, but maybe it does make sense for them.
It's existed for a long time in corporate treasury world that you have an in-house bank, or you sort of take more direct custody of some of the accounts yourself, and you do more of the accounting, and you do more of the FX, and you sort of that for the largest global corporates, having an in-house bank is understood. So can I make that more automated and push it down market? Can I have something, especially with stable coins, where I'm able to move dollars 24/7 around the clock to where they're needed? And can I automate my liquidity management with some AI? A lot of people are already building that. Like, that's happening.
Yeah, it's happening. Okay. Thank you very much, Simon. That was a wonderful discussion. Can I ask you a personal question before we close this recording?
Of course you can, yeah.
What are you reading? What are you enjoying? Are you listening to music? How are you relaxing? If you are relaxing.
Yeah, no, two young kids, not sleeping much. So I just read Stop Harming Customers, a Compliance Manifesto by David Silverman, which is a book about compliance that made me laugh out loud on more than one occasion. I would strongly recommend it. If you've ever worked in or with a large financial institution, it will hit very close to home. And it's not a comedy, it's just the comedy of financial services. I just watched, I forget the name of it, some sort of Netflix about Ridge in Utah. That was phenomenal. But most of the time, I am just trying to sleep with two young kids. So
I can
just trying to
imagine.
sleep, trying to hit the gym, trying to get through day by day. They're very young, they're very happy, they're very healthy. So I am blessed. How about you?
Well, my kids are in university, so I am blessed now in this period to be able to read tons of books at my leisure. So first of all, I don't know if you know, we have this fintech book club with Jim Perry and Stessa Cohen and Barb McLean, and we read one fintech book every quarter and have a LinkedIn Live. We've just broadcasted Jason Mikula's book. We
Oh, wow.
read
Awesome. Yeah.
that one and discussed that one, and our next book to be announced. But beyond that, I'm very much into Japanese fiction. So that's
Ooh.
what Murakami is. I love his fiction. I need something completely different than what I dwell in. Social media and news and tech and all that cutting edge, keeping up, which has become even more difficult these days, I must.
100%.
And for me, there's a lot of also spiritual practices. Meditation has become a big thing because it really helps me mentally offload. So it's a practice that has become part of my life.
Well, I hope to get there someday.
You will get there someday. You're a couple of years behind me in terms of family development, so that matters a lot.
It does. It does. It does. Well, thank you so much for having me. It's been a very enjoyable conversation.